Hello, this is a preview of a video that I make about AMD, and I show a little option strategy about it. Yeah, I very much welcome input, not only on the financial aspect of it, like if I say something wrong, please tell me, because it's good for me to think about those things, but also in terms of presentation and terminology. So if I say something stupid that I should phrase in some other way, please also tell me. So this can be a good video. I will keep this very quick. I guess it might be a little bit longer based on your feedback. The final video might be longer. So let's start. So this is a presentation about AMD, and I will present a little option strategy that might work nicely in the next 6 months, basically. You know, if we look at simply Wall Street, AMD, it has a great future, great health. The past is bad, and dividends non-existent and value non-existent. 4 out of 6. Future growth somewhat mixed. If we see the analyst recommendations, that's a strong buy based on 29 analysts, and based on some forecasts here, they think that the price might go to 200, which is about doubling the existing price. But I believe it might turn even better than that. Why do I believe that? So AMD right now is number 36th on Nasdaq, and its market cap is 190 billion. And you remember from our teenage years, we always wanted AMD to win Intel. Intel was always the successful one. And now it seems that AMD is actually above Intel. It's on 48. Intel has 146 billion market cap. I see reasons that AMD could double its price, and this would bring it around 16, 17 of ranking where Broadcom lives right now, which has 380 billion market cap. And why is that? Obviously, AI. So this graphics card, MI300X, is a very special one because it has 192 gigabytes of RAM on the chip. So those are those blocks on the side here, and it has 4 GPUs. But the reason why these HBM memory chips are so important is because they can fit the large number of parameters of generative AI models like ChatGPT. This means that they don't have to get parameters in and out of the GPU, and the training and the inference can go much faster. Now all those look super impressive, and it's all about timing. This AMD MI300A has 3 GPUs and 1 CPU, and it's sampling now. And people talk about this and it seems okay. But this one is 4 GPUs, so they replace 1 CPU with a GPU. And this is MI300X. And this will go out in Q3, and the production will ramp up in Q4 2023. And I believe those are not really priced yet, because AMD right now has very little presence in the data centers. We can see here Nvidia with a market cap of 1 trillion is obviously the king, but at the same time they cannot deliver enough GPUs, so they're fully sold out. So AMD providing those GPUs that have more memory than the H100 Nvidia GPUs, that is their best in class right now, will increase their share in data center infrastructure, and this is what I believe will make the price skyrocket. Interestingly, we can see that maybe Meta will be the first one to buy lots of those graphics cards, but this is just speculation. Another thing that gives advantage is the interconnect. So AMD bought Xilinx a few years ago, and this allows them to make calculations, so all the reduce operations that are needed for AI in the interconnect, so not in a GPU or a CPU, but on the wiring between them. And we can see that Google uses on their own TPUs this clever type of circuit switching, makes it easy to route around failed components, and they even tune the topology to increase the performance of machine learning models. So there might be an element there also where they are strong. The problem with AMD is that they are not good with software right now. So Nvidia has Kunda, which is an established thing. Nobody likes it a lot, but it's used everywhere. But AMD has committed till the end of the year to improve its software tooling, and it works with Hugging Face and PyTorch, and highly likely, I believe they will make it. There's also this announcement from Mosaic ML. So that's a layer that is used under PyTorch in order to compile, let's say, to specific topologies, GPU topologies, the high-level neural nets. And as they support now CUDA, they are going to support AMD technologies and they are going to provide similar performance. So yeah, for existing GPUs, they can make it 80% as fast as NVIDIA equivalent GPUs. But again, the big question is what will happen with MI300s versus the H100. Okay, so based on those, I believe that AMD it releases earnings results in a few weeks at the end of July, and probably it will show nothing because this game has not played out yet. But in Q3 and Q4, I would expect to be increase in earnings that they can recognize because they will have lots of orders for those MI300X GPUs. Okay, so I'm looking on AMD call options now, and I'm looking for an expiry date that is in 2025, so very far away. And that's because this is a kind of long-term bet, so I want the theta to be relatively small. So if I divide this by this is 0.3% per day what I pay due to time decay. If I try some option that expires sooner, this divided by this, it's 1% per day. So that the time decay is too fast for me. And so I will choose an option that expires in January 2025. So I will examine different strike prices like 120, 140, 180, and 220. And I have coded here the option mathematics using the option price library. And we see 549 days to expiry. And I want to see what will happen in 3 months' time if, and this is the big assumption here, the implied volatility doesn't change. And okay, we run here the projection. And we can see different options. So call 120, call 140, call 180, call 200. And this is the PNL given the AMD price at that point in time. So we see the return is about 0 at a price of 125. And if we get those very out of money options, we can lose potentially very quickly all the money we put into it. But we can have crazy returns, so even 500%. Now, the big problem that I have is that this is a long-term bet, and there are macroeconomic things beyond AMD's control that can make this bet go bad. It might be interest rates or even a sudden drop of interest on AI, which I think it's not very likely, but you never know. So the question is if we can trim somewhat of the potential profit and insure against such potential bad outcomes that are outside of AMD's control. And indeed, we can use a put option on Nasdaq, so bet against the technology sector in general. And the Nasdaq, of course, includes AMD, but also it includes NVIDIA and all the other big tech giants. So by using a put option, we can say that if the entire tech sector goes up, I want to make money, so I mitigate the loss from AMD specifically. And we can analyze the returns of AMD and Nasdaq, and we can see that the results are correlated, although the correlation varies from month to month, but overall it seems like there is about 70-80% correlation between those two. So when AMD goes up $1, the Nasdaq goes up 80 cents. And based on that, we can project the AMD price to Nasdaq price and buy this Nasdaq put option for insurance. Something that I'm wondering is if Nasdaq is a good choice. Maybe I should find something more specific like semiconductor ETF to short, but Nasdaq sounds more liquid and they should be heavily correlated, although it might be less focused, so I hedge against lots of risk that is relevant to AMD. So I don't know if Nasdaq is the best option there. And then let's see the return of that option. I mean, those labels don't apply right now, but you can see that as soon as we hit $100 in AMD, we start getting very sharp positive results from this put option. The put option is a $50 put and the current price is 56. And the expiration date is on February of 2024. There are no put options with larger expiration date for Nasdaq. So let's see what happens when we combine the two. We can see here we lose some of the upside because this goes to buy this put option. But you can see that we can recover the losses and even profit a bit if AMD and the whole sector at the same time go low. And here with this projection, it seems like we can lose about 40% of the price and we still get pretty much quite a bit of the upside. So with some calculations, if we buy 1.7 put options for Nasdaq for every one call AMD option, we get this curve. Of course, in this case, we can also lose all our money if AMD goes down and at the same time Nasdaq goes up. Of course, this is unlikely, but this is exactly the bet we take here. We bet a positive AMD bet, and we just want to ensure in the case the sector goes down. Okay, I hope all this makes sense, and I hope this video is useful for you, and please let me know all the feedback if I say something wrong, if the terms look naive, or whatever else. Tell me and I will try to make a better, more precise video or fix the models or anything else. Thanks for watching.